The power of fair value gaps and the way that I use them is definitely an ICT concept. And basically, you're looking for a bearish fair value gap or a bullish fair value gap, and you want to make sure you centerize that around your bias. So you need to first, on a higher time frame, have a bias, understanding why this fair value gap should do X, Y, Z, and then we can talk about what you should be looking for in the charts. Now, in this case, basically, if you're looking for a bullish fair value gap, I'm going to show you what fair value gap looks like in a little bit. The bullish fair value gap is going to be looking for bullish, so for it to come back down, you're waiting for it to come back down into this area. This would be the fair value gap, and you're waiting for it to shoot up. And then the exact same thing is the opposite. So we broke structure or took liquidity, leaving fair value gap. In this case, it's a bearish, and we're looking for more on the downside continuation. Now, this is a bullish or bearish example right here. I'm on the 5 minutes to keep everything simple. You can see that we're looking at a displacement candle right here. This right here, this price action. Let me zoom in a little more. This price action right here to here, right? You see that it's missing, like this wick to that wick. We're missing price right here. So it's like an absence of price right there. This forms that fair value gap. So on the 5 minute, this would be your fair value gap. And what you're looking for, if your bias is correct, or you're looking for a higher time frame, like I'm looking for liquidity down here, we got some equal lows down here, pull liquidity X, Y, Z. I'm looking for us to first break structure, take this liquidity, and I'm not selling here, I'm not selling here. I'm waiting for us to get back into this fair value gap. And me personally, I'll be going down to the 1 minute. I'm looking for entry, but the idea is basically inside this area, I'm looking for shorts. I'm looking for sell opportunities for us to go in short. So again, it'll be looking like this, something like this. Again, I'll be on lower time frame, but just for this presentation, be doing like this. So you're looking for something like that. You're waiting for it to come back into this range. And also, you can also look at this as well from a dealing range standpoint. So from this high to this low, you can see back into this fair value gap. We're back into OT the range. You trade like that. Or also, just one thing I do think this is also correct as well is once we have that displacement candle, we're then looking for a reaction coming back up, getting in at that 50% mark right here, which is again back to the fair value gap. Again, listen to that word, fair value gap. So usually fair value gaps form of the middle or fair value of the gap. So if you don't know that, that's something to kind of keep in mind when you think about fair value gaps. It should be fair value of the price action or the dealing range that you're working with. In this case, fair value, half of this range back into premium to then short for this leg and then this leg and keep going lower. So again, you need to be looking at the high time frame. Now, the biggest thing that I can say, I can show you a bullish example, is when to trust fair value gaps, when not to trust them. I literally took this trade. You can go back and look at it on the channel. But the biggest thing I wanted to take from this is when we are looking at fair value gap, I'm not just seeing any fair value gap and I'm showing it, right? I need to have context. I need to have bias. For this is a prime example right here. This is a 1 hour order block on a higher time frame. I drew out again, go back and look at it, but on higher time frame, we are in a 1 hour order block. So that means price should be shooting up out of this reaction, out of this price action. Also understand what time of day we're in, right? We need to understand what time of day in when we start using these tools. So I'm also looking at this could be New York reversal. This is 10:15, 10:30, 10:20. So this is a good time for price to be shoot down as a jewelry swing, right? Come down, accumulate more orders, and then could be zoom out. We're bullish for the day. It was bullish for this day, right? So it came, swooped these lows, all the good stuff came back down, and then boom, we're looking for reaction to here, and I'm looking to target up back to in this range right here before we even sell off. So zooming back in, the reason I say that is because you can clearly see that we have a bearish fair value gap right here, right? But I'm not looking for that to hold in this case because I'm looking for us to shoot back up. And to also identify that we are going to shoot back up, I'm looking for another sign of a bullish intent. And if I was to zoom in, you can see that we have a 5 minute fair value gap right there. And this literally is what I played off of. So the fair value gap, so remember, I see this bearish fair value gap, one candle right here, you can see that bearish fair value gap. I'm not looking for that to quote unquote hold in this case at this moment in this present time, because I'm looking at the higher time frame, looking at the time of day. I'm looking at that we should be going up to then go back down, and I'm looking for us to play off of this reaction again, going back up. So looking at zoom in, we got the 5-minute fair value gap right here. So looking at that area right there, this is where I was again looking at my interest area right here. When we came back, we broke structure, I took liquidity with displacement. It's the same thing in my opinion with breaking structure, or we broke we shoot up with displacement, leaving fair value gap, not buying here, not buying here, not buying here. I'm waiting for it to then react off of this fair value gap, this bearish fair value gap right here, come back down lower into this fair value gap, right? And I want to see this price hold. I want to see us react into this fair value gap, and I want to see what I'm looking for. Saw what I was looking for on a lower time frame, and was able to, I think it took a trade something like this, and got in and out right there. At this, I was opening for true open, and I was leaving runners going for here for midnight. But again, the idea was basically us operating off a fair value gap and knowing when to take that fair value gap, right? I didn't take this sale, me personally. Again, I see this fair value gap, but I was looking at this bullish fair value gap, looking for the shoot up. The time of day and what we're bouncing off of on the high time frame showed me that I was like, okay, we could be continuing on this upside trend to even just go lower. So right, we go higher to go lower and vice versa. So that's the way that I use fair value gaps. Again, we want to go to the 1 minute and look at that entry real quick. What I was seeing was us come back. Again, don't get zapped into the lower time frame. Remember, we're doing this from high time frame. This was a 5-minute fair value gap. Me personally, I look for that reaction. You can see it's come down, sweep out those lows, come back up, getting in, stop loss below that, and you can see it's, like I said, we're hitting that those targets, and liquidity and stuff like that. Again, we'll kind of look back at the video as well, but all stealing from that 5-minute fair value gap and high time frame reaction, and then looking for that reaction. So I don't want to talk too much about it because I think I want to talk this with another video by talking about liquidity sweeps and all that good stuff. But this is definitely the understanding of looking at price action, understanding what fair value gap should do and why it should be doing it, and then also looking for continuation. So that's all I got for this video, and I hope to see you next week.